everyone. Well, today's episode of Market Makers features Shibani Sircar Kurian. She is a fund manager at Kotak Mutual Fund and has a total experience of 20 years in the Indian equity markets. Shibani, thank you so much for joining us.
Thank you very much for having me. It's a pleasure being here.
Thank you. Kotak Healthcare NFO is going to be open for subscription between 20th of November and 4th of December. And that quickly brings us to our first question. The first one being, Shibani, do you think this is the right time to invest in India's healthcare space?
Absolutely. Health is wealth, as you know, and we all want to live longer and healthier lives. And that's the crux of the opportunity set that the healthcare industry brings to us. Now, what we've been seeing is that global population is aging, and as you age, chronic diseases become more and more prevalent, and therefore there is this growing demand for high quality healthcare but affordable in nature. We looked at statistics and we saw that back in 2021, about 1 in 10 people in the world were 65 years and above in age. But it is now projected that by 2030, about 1 in 6 people will be more than 65 years in age. So, therefore, as the population lives longer, medical spending will be on the rise. And as medical spending increases rapidly with age. And that's where the structural opportunity set is there for the entire healthcare space. So this is therefore why we believe that, if you're looking at India's healthcare opportunity from an investment perspective, not only do we want to live longer, we can also actually invest in the sector and therefore create wealth over a period of time. Also, what we saw is that when you look at from an investment perspective and just shifting gears a bit here, when you look at the frontline indices, say look at Nifty 50, Nifty 100, or even the Nifty 500, which is a broad-based index, what we saw is that the representation of pharmaceuticals or healthcare as a sector in these indices is actually very, very low. And therefore, the opportunity that a pure play healthcare fund brings to the table is that within your overall equity investment basket, this gives you a significant space or an option to invest, which is purely a healthcare fund or a healthcare sector oriented fund. So, from that perspective, also looking at within your overall equity asset allocation, a specific healthcare fund also makes sense, is what our belief is.
Understood. Okay, so moving on to the next question here. Which pockets are attractive in India's healthcare space?
So healthcare as a sector, while we tend to believe that this is a very narrow sector and this is only pharma or generics play, but over the last few years, India's healthcare investment opportunity set has become extremely diverse and it's broad-based considerably. So if you look at the opportunity that are present in different segments, so it can be, of course, the US generics place, for instance, where there is a large opportunity set and India is a dominant player. It can be the domestic formulations business. It can also be the CDMO space, which is essentially contract development and manufacturing. It can be the API space, where API stands for active pharmaceutical ingredients, which forms the backbone of the pharmaceutical sector. Today, it can also be hospitals, diagnostics, medical equipment, or even the health insurance segment. So, therefore, the overall investment theme, which is healthcare, is fairly, fairly large. So if you look at India today, India is a very essential player in the global pharma industry. It is one of the cheapest manufacturers of quality medicine and therefore is a large player where the generics medicine supplies are concerned across the world. And India, in fact, is ranked third in terms of pharma production by volume, supplies to over 200 countries. And therefore, there is a large, again, pocket of opportunity where generics is concerned. But over a period of time, now the healthcare space is poised for the next leap of growth where specialty pharma is concerned and therefore supplying high-end specialty drugs and also providing high-end hospital or the entire high-end tertiary hospital cares. So what I'm trying to say is that if you look at the opportunity set from an investment perspective, the opportunity set, which was earlier predominantly export-led generics business, has now become a fairly, fairly large and diverse opportunity. And finally, post-COVID, where the world is likely to, diversify away from China, especially in the API segment where China has been a dominant player. Again, there is a large opportunity set where people now want to diversify away from China, and therefore India comes into the picture.
All right, very interesting highlights brought in by you. Moving on to our next question, Shivani, what factors could drive growth in this sector over the next 5 to 10 years?
So, as we started out our discussion, the population itself is living longer. As you live longer, there is this need for affordable but high quality healthcare. Chronic diseases rise with age, and therefore, that again is a large opportunity set. So, first and foremost, the key driver is the aging population globally. The second aspect that we look at for India, for instance, if you look at India in terms of healthcare spend, India lags some of the developed countries. So the total healthcare expenditure in India is just about 3% of GDP and is among the lowest in the world. However, as per capita income rises, it is also likely that healthcare spend would keep rising, and therefore there is this structural growth opportunity that presents itself. Thirdly, from a global generics perspective, US is a large market, and India today has the second highest number of US FDA approval sites, and therefore India is a very very large player where US generics business goes, and almost 20% of supply of generics drugs by volume comes from India. So again, that's a structural growth opportunity for India. The fourth, and again, this has come up over the last few years, is the entire healthcare space where hospitals are concerned. One, of course, healthcare expenditure will keep rising in India itself, and India also can become a large hub for medical tourism across the world. So, if you look at the way the doctors who have been trained in India, they are highly regarded across the world. There is a large group of doctors who are expat doctors, and also, there has been a sharp rise where medical colleges are concerned in the country over the last few years. And all of this together has helped and enabled India to become a hub for healthcare services going forward. So, therefore, there are numerous drivers for growth for the sector, especially if you look at it from a medium to long term perspective. And
Hmm.
all these different segments where India is now becoming a large player can contribute to growth where healthcare goes.
Understood. Now that brings me directly to my next question. Now, in terms of the business model, Shivani, what are the advantages of investing in healthcare companies?
So absolutely, very interesting question. And when you look at healthcare as a sector, one can actually draw a lot of analogies from the IT services space. So both are export oriented in nature, but both the sectors have undergone a significant amount of transformation. So as you know, and as we were discussing, Indian healthcare companies are well placed to serve not just domestic opportunities, but global opportunities. So when you look at the entire transition or the evolution of the Indian pharma business, Indian companies in the pharma space started out as high quality suppliers of low cost drugs, right? So there was this cost advantage. And then over a period of time, we've seen them move up the value chain. So if you take a step back and see how the IT industry has evolved, it is pretty much along the same lines. So Indian IT service providers were essentially competing, and they were low cost providers of IT services with people having significant amount of technical know-how. And now the companies have moved up the value chain. And similarly, so is happening where the pharma industry is concerned. So what started out with just generics as a business opportunity, and in terms of business models, these models are now evolving to more and more companies providing specialty pharma opportunities. And innovation here is clearly the key in terms of the growth opportunity set and the evolution of the business model where many of these companies are concerned. The second aspect of the business model in terms of evolution, where a lot of the companies are concerned, is as we were discussing, the medical tourism angle, where India today has emerged as a destination for affordable but high quality healthcare and medical treatment. And in fact, if you look at some of the numbers, it is estimated that almost 3 million medical tourists are likely to visit India by 2030, and then the opportunity set becomes large. So what we're seeing is that for many of these companies, these business models are also evolving. Companies are moving up the value chain in providing not just low cost
Yeah.
supplier or just being low cost suppliers of drugs, but also providing specialty treatment and specialty pharma, which is becoming a large opportunity set.
Got it. All right, now next question here, Shibani. What is your investment strategy or approach to select the companies from this particular space?
So our, as a fund house, our investment strategy and philosophy has always been very well articulated. Our focus has always been on discipline and process, and the same is likely to be followed where this fund is concerned. Our investment process is also backed by a very, very strong research team as well as a fund management team.
Hmm.
In terms of the strategy that we will, deploy for this particular fund, our strategy will be more bottom up in nature, of course, within the entire healthcare theme and the universe. So the way we will look at identifying companies which fit into our investment philosophy, we will employ a model which we call as the BMV framework, which is business management and valuation. Now, as an investment philosophy that we follow at a fund house level, we look at companies which are growing faster than the industry in which they're operating in, but are trading at reasonable valuation. So for this fund also, in terms of selecting companies, the same investment philosophy will apply, which is growth at a reasonable price.
Hmm.
Now, when we look at the BMB framework, what are we really looking at? So B stands for business. Here we are looking at companies where the business is scalable in nature, where the
Hmm.
company is exhibiting growth, which is also sustainable over a period of time. M is management quality or corporate governance. And therefore, we are trying to evaluate companies on the basis of their corporate governance practices and also the ability of the management to execute in terms of the strategy that they have adopted. And finally, V stands for valuation, where we are trying to marry not just a price to earnings or an EV EBITDA multiple, but we are also looking at how return ratio profile, cash flow generation is looking for the company vis-a-vis the valuations that the company is currently trading at. So that's the entire model that an investment strategy that we will deploy. So essentially bottom up in nature. The portfolio will be market cap agnostic, so flexi cap from that perspective, but keeping in mind the overall process and the philosophy that we have employed at a fund house level as well.
Got it. So now this discussion brings me to my last and the final question, and I believe one of the most important ones. How do you plan to manage the drawdowns or the risks?
So risk is ultimately the entire crux of fund management, right? And managing risk is what really results in generating alpha on a sustainable basis. So our approach to stock picking has been always laying maximum emphasis on risk adjusted returns. And this is backed by an experienced research team. So the research team, which brings a lot of experience to the table, helps in identifying companies not just on the basis of the maximum upside that you see in a particular stock, but also takes into account what can be a particular downside or what are some of the key risks. So therefore, over a period of time, what we've really seen is that picking the right stocks is of course important, but also avoiding pitfalls is as equally important in generating long-term alpha or long-term wealth for an investor. So from our stocks that we cover, and the same holds true for the stocks within our universe of the healthcare sector, what we keep doing is we keep monitoring these stocks on a regular basis. Every stock that we have under coverage has scenario analysis, which is done under a base case, bull case, as well as a bear case. And that helps us identifying risks to a particular business model. And all of this, in terms of our in-depth financial models, are evaluated on a regular basis, which helps us keep track of what's happening in the company, what can be the potential risks. And therefore, these are some things that we will keep doing where this particular fund is also concerned, which will help us focus on a longer term risk adjusted basis for a particular stock that goes into the portfolio.
Got it. All right. Thank you so much, Shibani, for joining us. It was absolutely a pleasure having you here, and we wish you all the very best.
Thank you so much. Looking forward to all the support for our NFO, which opens on the 20th of November and closes on the 4th of December. As we were discussing all through this, interview, this segment often is ignored because it has a very small portion in terms of the index and some of the frontline indices. But what we believe is one, the opportunity set in terms of long-term growth and more structural growth in the sector is large. And secondly, the business model, as you very well asked, a business model of companies in India are evolving. Companies are moving up the value chain, and therefore the runway and opportunity set for growth is huge. And finally, before I end here, this is also a sector where valuations are in your favor. So when you look at long-term valuations of the sector, the valuations at which companies are trading at today are in line with long-term averages, and therefore, within the framework of business management and valuation, the sector has a pretty good fit. So thank you very much for having me, and pleasure interacting with you.
Thank you so much, Shibani, for joining. Thanks a lot.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.